Okay, good morning guys. Welcome to another video on CTI, and this is a continuation for the retracement video that was cut short yesterday. Retracement or correction. So basically, before I get into that video, let me answer the question that I dropped in the Telegram chat about this trade. I think it's on 30 minutes, 1 hour. Excuse me guys. It's currently 5:45 a.m. I have been studying literally all night, so I'm a little exhausted. So basically, what you see right here is the highs, right? This is the start of a trend. Let me put it like that. Start of a trend or start of a structure, basically. Now, if you observe something, if most people want to draw if they want to mark up their chart, they will do something like this now, right? They will do something like this and something like this, then something like this, right? And this is very wrong in the sense that you have already created a lower high for yourself over here, but then there was no structure formed, right? What I mean is this. Let's take it back. What I mean is this. When price created its highs and remember I said the highest point that price gets to before creation of a new low is the valid lower high. Now this is the highest point that price got to. This is not the main low, because if we were to mark this out, right, mark this low out, take it to this area, boom, structure was not broken here, price was still above this low, literally. So this lower high, this lower low is not valid, meaning this lower high is not a valid lower high, because this mini lower high right here is what puts is like a product of these lows right here, right? But your original lower high, which is this number 2 that I marked over here, is a product of this, right? So if we're marking this, we're going to be marking it this way, right? Highs, low, lower high, lower low, right? We're not going to be taking this because this did not break structure, right? And then this is a valid lower high because it created a new low, basically, right? So until we break structure again, no lower high is valid, right? No lower high on, even if we create what comes to this point, does something like this, does something like this, it's still not valid until this area is broken. Boom, that's it. Now most people will be like, this area, was it a change of character? No, it wasn't a change of character, because if you check the last, before this low was created, it was between this point and this point, right? Until price had broken this area right here, or this area right here, price has not established anything solid in the market yet, right? Is perfectly okay for you to sit on your hands in the market when price hasn't really given a clear direction what it wants to do, right? Unlike this area where price broke structure and created a lower high, you can capitalize off this to take a trade. Now I did, right? I took a trade off this area, I think around after the break of these lows, I think around this area, this retest. Now let me look for it. Yeah, okay, so the entry was 1.43. The entry was 1.43. It was around this area, right? The retest of this zone. Basically, I took a trade around this area and I took my profit around this area. So that's that for that. I just wanted to explain that to, get it off. Now I'm going to be using Euro USD to explain the like a continuation video for our correction. Now, one thing about correction is this: it's more like the phase in the market where price decides to calm down and grab more liquidity to continue its push. Right now, I'm going to use two scenarios to explain this, and this is going to be the first one. Let's mark out this like we did before. All right, now this is how correction or retracement works. Now let's say price is playing around this area, right? Price is literally dancing around this area. Boom. And then we get something like this. Boom. Remember, I thought about this. This is an indication. What makes it an indication? Simple. It broke a swing high. Swing highs. Remember, guys, an indication is only valid if a swing high or a swing low is broken. Now we have our swing highs over here and our swing lows at this area. And in this case, price broke above our swing high. Now, why does price retrace in the market? Two reasons price retrace. One, to balance the market, to find equilibrium, right? The market has two players, basically buyers and sellers. And when price shoots up in one direction, price has to find a balance for it. You guys have heard the word FVG, right? Fair value gap. I'm going to teach you later on. Right, in this video, I'm just going to teach you guys the basics of what retracement is, retracement or correction. So FVG is more like is a fair value gap, is a point in the market where market come back to balance both buyers and sellers, or imbalance. There's also something we call imbalance. Is a point in the market where only one player in the market is participating in what's going on, right? Price literally needs to come back to feel that. But then this is what a retracement is. Let's say this area over here, it's takes 500 to break. Now, before I proceed, I just remember something. Let me explain something. Most people would have asked me, why haven't I thought about the concept of support and resistance? Now, listen, I try not to use those words. I try not to teach myself those words because I used it for a very long time, right? Every beginner trader, support and resistance. But then the concept that goes with support and resistance is one that, it's more like a misconception, right? Because we have this ideology that we buy at support and then we sell at resistance. And in reality, you are supposed to do almost the opposite of that, right? What I mean is this zone, these areas, support and resistance, these are key levels that requires money to break them, right? Take it like this area right here, price is more like consolidating in between. It requires money, right? Say this area is 500, and then when price goes to this point, price had only 100. It came back down, grabbed liquidity, took out people who are, people who bought around this area, took all of them out, came back up. Now it has 200, not enough. Came back down, took another 100. Now it has 300, still not enough. Came back down, went back up. Now it has 400 or 450, still not enough. It came back down, took a lot of people who bought. That's why I always say stay away from a consolidating market because it's gonna take your stop loss a lot, right? Now price comes back here, take all that stop losses, and now it has like 550, and then boom, it breaks, right? This area in the market, they require money to break above. That is why most of the time price consolidating, and I do not take trade in a consolidating market, right? Basically, And then let's say when price broke above this area, price approached this area, right? Now this area is 1,000. So this area is basically 1,000, right? What do you think market is gonna do when price gets to this area? Hold on, guys, I'm coming. I don't know what's wrong with. Now let's say this area right here is 1,000. Remember, this point that held price for quite a while was 500, and price just took 550 and bust above, right? Look at it like this. When you have a Coke bottle, like a bottle of Coca-Cola or Pepsi or something, and then you shake it for a very long time, what is it gonna do? Basically, it's gonna explode, right? That's almost the same concept here, right? Price has been accumulating. It's more like you shaking up the bottle, and then boom, price exploded. But then after the explosion, you will see price retrace back down, like price literally coming back down, right? This is basically what happened. Now when price breaks above this area, there are people who call breakout traders, right? This is what breakout traders do. Literally, a breakout trader will wait for price to break above an area. They will take buys around this area. They will take buys around this area. They will take buys around this area. And most of them will also take buys around this area. Remember, there are people in the market who do not understand how prices work. There are people who feel, and I have a friend like that. This was his ideology back in the day, because most of the time you see price of some certain tokens, they are pushing, and this is when he'll be like, yo, I want to take a buy right now. I'm like, yo, you don't buy a market when it's pushing, right? Remember in the last video I explained something about premium and discount. People want to buy when things are lower, not when things are up, right? That is the kind of trader you should be. You should not be the kind of trader who, you buy when you feel things have started going up. No, you should be prepared to take buys. Now, like I said in this video, I'm just going to explain retracement. Being prepared to take buys is the same thing as waiting for a retracement or a correction to happen, because like I said, I trade in 3 phases. We have the indication, or price showing you a clear direction of where it wants to go. We have the correction or retracement, and then we have the continuation or the further push. The correction or the retracement, which is this phase that I'm explaining currently, is where you have to prep for in the market. Because let me show you something. When price busts above this area, people will take buys here, right? Let's say this trader buys remember, we are taking a push above this area means that we have more money, right? Say this trader bought 520, and then this trader bought 200, and then this trader bought 200, and then this trader bought 350. Boom, right? So right now we have 1,000 sellers at this point who are holding price. Excuse me, guys. We have 1,000 sellers. Now market can't go past this area, right? Because it has exhausted. Price literally used 550 to push price up to this point. What do? We have 350 right here. Boom. Price will sometimes do something like this. Price will take out this one and then come to this area. Still not able to break, right? Price will come back to this area, come to this area. Still not able to break. Price will come to this body and eventually create something like this. Boom, right? Most of the time people see it and they'll be like, yo, how does this thing literally work? Price just faked me out. Price just faked us out and all of that. This is literally the concept behind it, right? Most people, they have this ideology of support and resistance that, they only take sells when prices are resistant level, right? They look for sells around this area. And then there are people who, they're like, okay, fine. I'm not gonna take sells are resist. I'm gonna wait for a break and retest, but then they get something like this, right? Price has hit this area. Instead of price to come back and just play around this area, do something like this and then push, no, price will not do that. Price will do this. Price will come back down into this area, test this range again, and then create something like this before eventually it takes off again. Those who have their entries around this area and probably their stop loss slightly below this area, they also get stopped out in the bid for market to grab liquidity, right? I'm going to teach you how to know when a correction is over, but these are basically the major factors that make markets retrace, right? The market has two players, but then everything, all things being equal, everything has to be in balance. One single player cannot move the market in a single direction. It creates some sort of imbalance and it becomes a problem later in the future, right? So let's get into the market, let's get into the chart and understand what I'm trying to say right now. Now, if you observe this market, this is Euro USD, this is what we marked last when we were explaining structure, right? I still have the markups just in case. Yeah, I still have all the markups on. So this is it, right? And again, I mark most of my structures are marked on the 4 hour, 1 hour, and the daily time frame, right? Depending on how calm I want the move to be. Like I've been waiting for this trade for like a whole week. It didn't play out. I'm waiting for what? I'm waiting for a retracement and a correction. Basically, what market did over here is this: price created a high. The reason market dropped from this point to create this retracement is because price met with sellers around this area. Now, let's say this area right here is 1.16845. Price needed more than that to break above this area. So what price did is, when market started pushing around this area, ideally a lot of players enter this trade, some enter around this area, some enter at this breakout, some enter around this point and setting their stop loss below this area, right? Price came back to this point, grabbed all the stop losses and had more liquidity to push price up, and then price took off, boom. And then when price got to this point now, it has met with selling pressure, right? It has met another set of sellers at this point. What it needs right now is for price to actually come back down, grab more liquidity, because people actually take losses in this area. I lost an account early this year taking a trade, because most of the time you'll be like, I was right, price just took me and I started going my direction. But the thing is, have you actually thought about where you entered from? Because face facts, where you take your trade from in the market is very, very important. That is why I tell people, you don't buy when price is buying. You buy when you know price wants to buy, right? That's basically what a correction or a retracement does. A correction or retracement prepares your mind for what the market is about to do. You don't take a trade impulsively. Price at the top, I'm taking it here before it leaves. No, literally you will get stopped out because price is going to retrace. That is where the patient game comes in, right? When price broke above this area, it was 10th of December, right? Today is what? Today is 19. 1, 2, 3, 4, 5. That was last week. 1, 2. Literally, I've waited for almost 2 weeks for price to come back to this area and react to this area, and I'm still waiting, right? I'm not going to take the trade impulsively. Now, there were times where market was already giving, some fake confirmation, and people would have taken their trade off that, right? So this is what price did in this area. Price came back after price has created a push. Of course, this is the overall push that price made. Now price on the lower time frame came back, created a higher low, right? And then created a new highs. Basically, this is a shift. This is more like a shift of structure, and then created a higher low, and they created a break, right? Most people would have taken their trade off here, put their stop loss below. Some would have taken it off this area, put their stop loss below. And what did price do? Price literally came back and took all of them out. Boom. Why? Because time frame is also a very crucial aspect of how you map out your zones, right? This move happened on the daily time frame. I marked it on the daily time frame. So I have no business going down to the 1 hour to look for entries or to look for what price is doing until price gets to this point. Remember, if you mark out, for those who trade support and resistance, I'm going to say this right now. If you mark a zone on the 1 hour or the 4 hour, make sure that the 1 hour or the 4 hour has come back to that zone. Then and only then are you allowed to scale down to a lower time frame to start looking for a shift, right, or a change of character. Until price comes back to that area, you have no business, because the lower time frame are going to fake you out, because price needs liquidity. Literally, price needs liquidity to actually move either upward or downward. I have seen scenarios multiple times where price is doing something like this. Now price created a low, price has created a high, right? Now price will do something like this on a lower time frame, do something like this, sometimes you do something like this, right? People will take sales around this area, price will take out that sales to continue further. Others will take buys, right? When it does this, sometimes it do something like this, and then you will think it wants to push up. Price will take everybody out, come back to the area it wants to play, and then move from that area. That is why, like I said, you use your higher time frame, you wait for price to come back to a higher time frame. I think I explained entries, possible entries I could have gotten around this area in one of the videos. Exactly, that is what I'm saying. This is the confirmation at this point that, okay, fine, price has created a higher low at this point, price wants to shift. There are possible ways you could have taken a trade around here, but you have to wait for it to play out on your bigger picture, on your higher time frame, right? So basically, this is a retracement or a correction that I'm waiting for, and you guys can literally see it happening. I'm going to call this trade for everybody, right? I'm going to call this trade. So this is indication, correction, confirmation around this area, then continuation. That's what I'm waiting for on this trade. And if you go back, you will see that price does this a lot, not just on this particular case. When market moves, it creates a retracement or a correction for a further push. You can check. I just showed you guys on SUI, on BTC. Boom. I actually thought BTC was going to do something like this, right? Because if you check price currently, it created what looks like a double top, and above this area there is a lot of liquidity, right? Because people are selling currently. What I anticipate price doing is price could potentially come to this area, take out all the sellers at this point, and then create some sort of structure to continue to the downside. It's a very big possibility, right? Because people have a lot of stop losses around this area waiting for price to continue selling, right? So let's go to gold. This is what gold did yesterday. Gold killed a lot of people yesterday, right? So this is it. This is what I've been explaining. Let's mark this area out, this particular area. Boom. Let's call this the consolidation zone, because literally you cannot buy or sell in this area. This is what price did. Boom, 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 boom. And then price took out liquidity, cleared everybody around here, and then came back to this area, right? This is a very clean and typical case. If you check on a higher time frame, you will see that it's a wick, right? It's just a wick. Price is not even established fully. Why is that? Now let me show you why. Price need more liquidity to drop. Now we have sellers around this area. We have stop losses around this area. We have another ones around this area, and then above this area, above this consolidation, we have stop losses around this area. What price did over here is price just came here to grab liquidity on this time frame, grab as much as it could, and then drop back down. I was actually thinking price was going to break below this area, or possibly break below this area, because that's what price has been trying to do for a while now, but it didn't do it. So this is one of the case study of liquidity, right? Liquidity is basically money. Let me not confuse you, like in terms of using the word. Liquidity is money, cash, funds, money that you trade with. Price taking liquidity in the market is price taking out money for a further push. This is how the market moves. And crazy enough, I have had the opportunity to own a token, a meme token, right? And I have seen people buy. People have bought memes. People are buying at certain areas, and there are times where I'll be like, yo, because when they are buying, they are moving price in a certain direction, right? But me being the owner, being the big player, I can be like, no, I can use this push that these people are giving me to like make more money for myself, right? What do I mean by that? Literally, when they are buying memes, price is rising, right? Price is rising. So let's say people buy around this area, buy around this area, buy around this area, buy around this area, buy around this area. So let's say your market cap was like 300k here. By the time these people have bought, price has gotten to like 400k. I, for one, being the big player, I could sell and take all their money down to this point again, creating more opportunities for more people to buy at this area back to the top. Right now, when I take profit and I sell back to this area, I will make money. When price pushes back to this point, the value of the token that I will have left will almost be the equivalent of what it was when it got to this point, right? Basically, that's how memes work. I literally was seeing all of this from the back end, right? I have owned a meme token before that was what, like over 100k at some point, $100,000 at some point, right? Now imagine what gold is a metal, right? But it falls under let me use commodity. Imagine a commodity that is global, like gold or BTC, right? Institutions, hedge funds, like the big players, the banks, they are seeing majority of these levels where to buy from or where people are buying from, right? So they know where liquidity is. They know where people are putting their stop losses. They know possible areas. I'm not sure if they can see it. I don't know. I can't tell. I haven't worked with an institution, but I have this conviction that they know, okay, fine, this area, people have taken buys now. Their stop loss around this area. They have a lot of stops around this area. Why not push price back down, take out the liquidity and move the market? They don't use their money, right? It's me and you, our retail money, our retail peanuts. That's what they use cumulatively, because there's a lot of retail traders in the world, a lot of them, and areas where people have taken some certain trades where there are orders. They call this area order blocks, right? Where there are blocks of orders, a lot of orders. You see most people when they are trading order blocks, they'll tell you, okay, let me look for one. They'll tell you waiting for price to pull back to this other block, and then eventually I'll do the trade and all of that, blah blah blah. Boom. Other blocks are point in the market where there are a lot of orders. Okay, let's take this for example, right? This, let me use everything here. Let's say this is another block. Basically, this other block shifted structure, had a shift of structure here. Price came back down, tapped into it, broke structure, and then continued its move, right? I might not have drawn it properly. When I get to that point, I don't really use it, right? So I don't really map it out on the chart, but I will look at my materials that I use to study so I can draw it properly. Other blocks are point in the market where there are a lot of orders, right? Institution can see these other areas, right? It's under other flow topics, how the orders in the market moves. where stop loss are placed, where take profit are placed. Everything, people see these things in the market, and then logically some people know how this thing works already, so they know that okay, fine, this area that you're putting your stop loss, I'm going to put my entry around this area. As you are being taken out and being, activated to be on the trade. So that's basically it, guys. Retracement is very, very crucial, and it's something you need to wait for in the market for you to do anything, right? If you check, price is always creating retracement and correction, right? This is it. Indication, correction, continuation. A continuation, when price breaks, becomes an indication. A correction, a continuation, right? Continuation at the break, at the very beginning is a continuation until it breaks the previous highs. When it breaks, it becomes an indication. After an indication comes a correction or a retracement for a further continuation. This is basically the cycle of the market. There's nothing else until price, of course, change character or shift structure and eventually creates a lower high or a lower structure compared to the previous one, and then break that structure that has shifted character for a further push in the opposite direction. Basically, that is how market work. This is it. There is no two ways about it. There's no rocket science about it. There's no need to confuse you any further. This is basically how market works, right? And what time frame do I draw my structure on most of the times? It's basically the 4-hour and the 1-hour, right? The daily time frame is for the bigger players, but most of the time I see easy to check out how the previous daily candle closed. But majorly I'm a day trader, so I use the 4-hour and the 1-hour, right? So this is basically all there is in this video, or all there is to this video. In the next video, I'm going to be explaining continuation and entries. Basically, that is a very, very important video. Is everything, right? Because up to this point that I haven't taught you how to enter the market, how to execute a trade. Yes, you know how to mark out the chart, you know how to mark out trend and structure, but how do I get in, right? Because take for example this trade, I'm waiting for EU, this sweet trade that I got into today, right? After price created this, I waited for this, right? This, remember, when price creates a new low or a new high and you don't want to get faked out, all you have to do is mark it out, right? What you have to do is just mark it out. Anything above this area is not valid, right? If price gets to this point, doesn't break, it's not a lower low. And until you get a lower low, you cannot be confident enough to say, okay, fine, price has created a lower high, right? So anything below that, anything above this is invalid. So basically what I waited for is, this is not really a clean lower high for me, because it doesn't have enough, I would say enough, what's the word? It's a quick move, right? It doesn't have enough players around this area, so I will not really consider this. What I will consider is this was the last low, this is the lower high, this is the lower low, right? This is the lower high, this is the lower low, not this and then this. But then I didn't really take it like that when I took my trade. I saw this as a low and a lower high, and then I waited for this because I saw price was coming back to retest this area. That's basically what I did. I waited for a retest around this area, this. I waited for price to react to this area because price was pushing aggressively off this area. So when price got to this point, after price created this, I waited for price to, I was waiting for this candle to close bearish, engulfing the previous one, but it didn't. So when price started rejecting back up, I took my trade around this area. Stop loss was, I think, slightly above this area, and then my take profit, as you can see, there's an alert over here for a three risk to reward, but price didn't get to that point, and I closed around, I think around this area. When price started pushing back up, I closed around this area for a 2 risk to reward. Still a good trade, but what I did is when price had already pushed, price created this indication, I waited for a correction and a confirmation around this area for me to take my trade eventually. This is actually something, this is a small trade, right? And the bigger picture, it doesn't really explain much, but the same concept, same way, same entry, same pattern of trade and all of that. So yeah, that's basically it. Go into the chart. I want you to go into the chart, right? This is an assignment. I want you to mark out 10 retracement or correction that you spot in the market. Valid. Use your 4-hour and your 1-hour structure to do that, right? Mark out retracement or correction in the market. Mark as much as 10, right? Mark as much as 10. You don't really have to submit it. If you want to submit it, you can. I will review it, but you don't have to submit it. Mark it out and relate it to this video, right? Basically, just relate to this video and see if you are actually understanding what I am explaining. Remember, this video is to enlighten you, to teach you about these things. You know them. Remember, my overall goal is not to eventually teach you guys or mentor you guys. My overall goal for doing this is so that when I start calling signals, you would understand why I am taking trades. I have a rule book for my trade. I have a rule that, okay, fine, market has to meet A, B, C, D, E like criteria before I execute a trade, right? Most of the time I just tell you, oh, price just created an indication and boom, a correction. I've taken this trade around this area. No, it's not really that. Yeah, it's superficial though, but it's not just, oh, it's just the break and retest that I'm taking. There are other factors that I'm taking into consideration before I take my trades. These are what I am teaching, right? Until now, you didn't know about the indication and the retracement correction, right? But now you do. And if you observe the market, you will not see now that, oh, it's true. This is how price literally move. Exactly. That's what I'm trying to achieve. So that eventually when I call out trades, it will be like, okay, fine. Price did this, price did this. And again, all these things I'm showing you, I'm not making them up. They are things that have always been in the market, right? I just simplify them so that you guys don't get confused and you can understand eventually why I take positions, why I take trade at certain areas, right? I'm not trying to give it other names like the ICT concept or BTMM, or others. Like they basically come to the market and a concept that has already been there, they give it a different name. The concept of other blocks is basically same as support and resistance. There's no difference, right? It's just new name, but I'm not renaming it here. I'm just teaching you guys how to see it differently and in a more simpler version, simpler way. So that's it for this video, guys. This video has gone on for like almost 20 minutes, 38 minutes, Jesus. So yeah, that's basically it for this video, and I'll see you guys in the next video where I will explain continuation and how to get entries. That's very important video, so I want you guys to pay close attention. So thank you guys for taking your time to watch the video to this point. Make sure you do the assignment, and you can score yourself. You can send it to the chat for me to also review. Goes both ways, and yeah. I'll see you guys in the next video.